Welcome to the second panel where we're going to discuss tax administration specifically as it relates to the gig economy. I'm Howard Gleckman. I'm a senior fellow at the Tax Policy Center and the editor of our blog TaxVox. I'll briefly introduce everyone else. David Williams, to my left, is Chief Tax Officer, Executive Director of Intuit. Next to him is Carolyn Bruckner, who's the Managing Director of the Kogod Tax Policy Center at American University. Next to her is Pooja Kondabolu, who's the Senior Tax Policy Manager at Airbnb. And finally, Nina Olson, who I guess everyone knows, who is the National Taxpayer Advocate at the IRS. So we have a range of perspectives here from the private market. Pooja, I know we're going to put her on the spot because at the first panel, everybody was asking, why don't the platforms do this? Why don't they do that? So we'll find out what the platforms really do. But I'd like to start actually with David because Intuit has actually done some surveys and he can do some level setting and give us a sense of what they found in terms of gig taxpayers. David, go ahead.
Thanks, Howard. It's a pleasure to be here. The views I'm expressing are mostly my own. Occasionally I'll represent something, but the key that I wanted to bring to this is that we engage with taxpayers and business people, self-employed or otherwise, in a variety of ways. Two major ones, our two lines of business, are tax preparation, obviously, and then online accounting. And that will become important, I think, later as we talk about how one actually invests gig economy or self-employed workers with the knowledge to actually comply with their taxes. We heard earlier in the panel discussions about how the platforms could do this, but we also heard Adam describe the process for tax compliance for self-employed workers. And I noted a number of the experts in the audience scribbling notes. And if you think about that, think about the average worker trying to understand what those compliance challenges are. What you'll see is what's reflected in our data, and one of the key points and takeaways, which is that most people do not even know what they don't know. And I'll give you just a bit of an example of that because I think that's relevant here and more broadly with regard to whether people understand the consequences or changes that the recent tax law will have on them. We do have a number of surveys, but one that I think somewhat interesting with regard to tax reform and tax cuts specifically. Only a third of the self-employed people we surveyed through our platforms had any sense of whether they benefited financially or not. Most of them decided that if they did, they would put some in savings, some in health insurance, and some in retirement, but they weren't quite sure what. But that was only a third. The other 2/3 hadn't seen any impact at all, and they're sure something's going to happen, but they're not sure what it's going to be. Now, these are folks, by the way, many of whom may or may not also have a W-2 source of income, but they're completely in the dark, essentially, about the impact of tax reform. More to the point, they are confused about how to comply, and that brings me to the second point. We heard a lot about the potential of the platforms to describe or disclose information about income, because, as Mike said, they have most of it. It's only a stone's throw. I think that was Elaine's comment that Mike appropriated, but that they may be able to touch that side. I think the reality is, and what we see with our customers, is that they leave money on the table. In other words, they don't actually understand what is deductible, how to think about that in the context of themselves as a business. Many of them are used to W-2 income, and when they step into the gig economy, or frankly, self-employment in general, concepts like saving money to cover their own tax obligations as self-employers don't exist. Withholding doesn't exist. And if any of you have done a statistically valid survey of Uber drivers that you've been with, you'll know what I mean, because many of them will say things like, yeah, I know something about that, but we're not sure what. We are also noting that there is no consensus about what this looks like. And you can hear that on the panel. I think the whole point of the first panel was a discussion about different perspectives on what's happening. We have ours in which we're seeing growth. Interestingly enough, if you think about it as a barbell, folks over 100,000 who are gig economy or self-employed seem to be increasing. Folks who are making a fairly small amount of money at the lower end, those side giggers seem to be increasing, and those in the middle at least initially, do not seem to be growing as a class of folks. We'll see whether that holds true over time. But I think the notion of higher skilled workers who are making over 100,000, and I think Mike referred to them as monetizing or what they've built in terms of human capital, is something that we've actually seen in some of our data. We also, and I think I'll close with this point, coming back to this notion of not knowing what you don't know, we did do a survey of self-employed workers and found about 36% of them report not paying taxes. And 46%, and this is the stat I'll close with, 46% of our respondents who are that younger cohort, or whatever word we want to use for it, say they've been audited, which we thought was quite interesting. Now, as you can imagine, for us as a company that's trying to serve and enable people to comply with their financial obligations, including their taxes, that's a subject of concern. And so I think the last point I'll close with is, I think it's worth a discussion once we've figured out what the tax administration consequences are, which I think we'll hear about from the panel. It's really worth thinking about how does one enable a self-employed worker or a gig economy worker in general to understand and therefore be able to comply with her or his tax obligations. And I would submit to you having two lines of business, one of which is episodic, which is the moment in time in which one prepares one's taxes, or ongoing, which would be the accounting engagement that we try to build and the ongoing engagement with our customers, that it is probably not the episodic moment that is probably best for educating and enabling people to comply with their tax obligations. And for those of you who are currently employed with a W-2 or remember it, I'd ask you to think back to that moment when you signed up, started your job, and maybe were handed a piece of paper that told you what to do with your taxes, filled out your W-4, if you could understand that, and then I'd ask how long you remembered that. How long does that stay in your mind? And how long, and did you remember that when you were thinking about your tax obligations and compliance? I'd submit to you, and our data suggests, that most folks do not have that top of mind in their day-to-day lives, and therefore are probably not as prepared as they might be to comply with obligations when they're self-employed. Let me stop there.
So Dave, before we move on, I have to ask you, of that nearly half of people who thought they had been audited, were you able to explore a little bit and find out what their interaction actually was with the IRS?
So it's interesting. I got that stat over the weekend, and it sent my eyebrows up, so I've asked. I want more data about it. I don't have it right now. But the bottom line is they think they've been audited, which means they've gotten a contact with the IRS asking them to validate something on their return, period.
Interesting. In the first panel, there was a brief mention, I think, from Mike about self-employment taxes and asking about what was going on there. And as it turns out, we have somebody on the panel who can answer the question. Carolyn has actually done a paper looking at the effects of self-employment taxes in the gig economy. So tell us a little bit about what you found.
Absolutely. Thanks, Howard, so much for having me. My name is Caroline Bruckner. I'm a tax professor on the faculty at American University's Kogod School of Business. I took over for Dave Cowder as managing director of the Kogod Tax Policy Center. And just this month, we released a paper entitled Failure to Contribute, which is an estimate of the consequences of the non- and underpayment of self-employment tax by a population of independent contractors and on-demand workers. This follows our 2016 research, which we produced in a report titled Shortchanged, which was essentially a survey of experienced self-employed workers that were doing work in the on-demand platform economy and how they interacted with their tax compliance obligations. And our latest research builds on our prior research and has three primary takeaways that you should consider when it comes to understanding tax compliance and on-demand workers. First and foremost, the numbers. We identified a population of independent contractors and on-demand workers, not just platform workers, but people working both on and off platform. And we estimated that there was about $7.3 billion of self-employment tax that didn't get paid for 2014. And that translates to about $6 billion of Social Security contributions that weren't made by these workers. And that matters. This is just 1 year, and this is a population that when you look closer at the demographics and you look at the nature of who's actually doing on-demand work generally and specifically platform work, these are people that tend to have a greater reliance on Social Security as their primary retirement vehicle. And so we looked a little bit deeper into the demographics of the specific census data that we looked at. We were lucky enough to get to work with some great experts from Census who are here today. Super excited to see you. Thanks so much for coming on our census data. And our data is a little bit different from other work that's been out there because we found that there were actually a few more women that were doing this work, but we also looked more broadly at on-demand work than just platform work. But the second takeaway from our paper is that the reason that most of these people, a major factor that most of these people aren't paying their self-employment taxes is because they're not getting a 1099 from the platforms that they work with. And it's because the thresholds for furnishing a 1099 are just simply too high. And as the first panel indicated, those rules were never contemplated to encompass the on-demand platform that we see today. And they're inadequate, frankly, for these populations of people that are identifying customers and providing services and goods through platforms that are processing payment. There are millions of these workers out there, and very few of them are hitting that $20,000 threshold. They tend to cycle in and out of the on-demand platform work, and they do it as a supplemental secondary source of income, not their primary source of income, and rarely do they exceed $20,000 in their annual earnings. And for those that do, those on Airbnb, for example, tend to make more money, but it's not often that they exceed more than 200 transactions doing Airbnb. So a lot of these people aren't getting any 1099. And the IRS has, established tax gap data that shows you that when there's no employer withholding or information reporting in place, you have a 63% chance of misreporting your income. That's going on, and we looked at it specifically with respect to self-employment income. The third takeaway that we found from this work is that what the gig economy looks like today is not going to be what the gig economy looks like in 5 years. Yesterday, the Post reported that Ford is test driving autonomous vehicles on the streets of DC. They plan to be commercially viable by 2021. If you look at the data on the on-demand economy, it is in fact the transportation sector, and this is the JP Morgan Chase Institute data, that's driving the bulk of the work and earnings that's going on with on-demand platform work today. Driverless cars is going to change the nature of that 5 years from now. And but when you look a little bit deeper into the data and you talk to the folks at JP Morgan Chase and you say, well, what are the other areas of growth that you see with the on-demand economy? They say that it's other services, and in particular, care work. And when you think about our aging demographics and you think about the reality that 10,000 baby boomers retire every day and will continue to do so between now and 2030, there's going to be a greater demand for care work. And it's not necessarily, at least obvious to me, that you're going to be able to have automation replace that kind of work. But what you will see is that kind of work migrating onto platform work. It might have been typical cash economy work in prior decades, but now platforms are starting to experiment with that and other types of temporary staffing work. Uber just announced Uber Works. It's fielding tests on a new platform service in Chicago right now on temporary staffing services. And care work's going to become a bigger part of the on-demand platform work that we see. And the last thing that we really learned about through doing this research is that when you look at on-demand work generally, not just platform work, the major trend that we see that really shows the inadequacy of our current information reporting rules is that you're seeing a digitizing of the cash economy. And let me give you a really good example. Last week, I was approached by a freshman on campus who came to me and said, I've got this business I'm running out of my dorm room. She's become so successful. She's 18 years old, has been on campus for 2 months, has been so successful, she has an online booking service. And she said, I need help. You're a tax professor. I need help, trying to figure out my tax obligations. And I said, okay, well, how are you getting paid? Oh, it's all cash. And I said, oh, really? And she said, yes, it's all cash. How are you getting paid? Venmo. All of her friends are paying her via Venmo. And when you talk to people and you talk to students and you ask, how do you pay for goods and services? I just did a random survey last night of at my class. All of them raised their hands when I said, do you use PayPal or Venmo? And have you ever used that to pay for goods and services online? Every single one of them raised their hands. So these are the trends that we have to keep in mind when we're talking about the tax compliance challenges of these populations, not just where we are in this moment, but where we're going.
So Carol, let me just ask you to close the circle on the payroll tax issue. So they're not paying the payroll tax. So who's hurt by the fact that they're not paying the payroll tax?
So when you look at the demographics of these populations, my data is a little bit different than what other people have looked at because we looked at a very specific census data, the SIP survey, and we found that the majority of people that were doing independent contract work or on-demand work were either Generation X or baby boomers, and they were older. And we also had a slight difference in that we had more women versus men doing it. And that's hugely problematic because women over their lifetimes have a greater dependency on Social Security because they live longer and they have higher healthcare costs than men do. But over the course of their lives, because they tend to take time in and out of the workforce, their Social Security earnings are generally lower. So when they're not paying in, even on this kind of work that they're doing, which is supplemental work, they're disadvantaging themselves because over the long scheme of things, they're not including those types of earnings for their calculation on their ultimate Social Security benefits. Now, it's really hard to extrapolate out how a gig economy earnings for 1 year would affect a lifetime of earnings. And that would be disingenuous to say that, we could do that kind of calculation. But what we can do is, point out the obvious. These people are not paying self-employment tax, and on the front end and on the back end, these people are more likely to be lower income and that they're going to have less Social Security benefits as a result of it because they're not crediting their accounts.
Good, thanks. Pooja, before we ask a little more about what the platforms could do, talk to us a little bit about what they do. We've heard about the $600 threshold. We've heard about the 20,200 transaction threshold. But tell us, first of all, what Airbnb does, but also give us a sense of what you hear in the industry about sort of how this really works, how this works in the real world.
Sure. And for those of you who aren't familiar with Airbnb, we'll quickly walk you through our business model. So basically, we're a marketplace, a facilitator. On the home side, we allow hosts to set up their own profile, take pictures of their listings, and upload that onto our platform. We don't ask them a lot of questions. Basically, name, basic information, and their, of course, payment details. On the guest side, similarly, just basic profile. We do verify their identity, and we ask basic questions for background checking purposes. And that's about it. We recently launched another tier of our business called Experiences, where we allow hosts to basically list their hosting experience that they're a professional or a subject matter expert at. So think if you're going to Peru, someone who knows the ins and outs of Machu Picchu can take you on their own self-guided tour. And the reality of the situation, this came up in the previous panel, I'll just speak based on my experience working at Airbnb over the last 2+ years. We don't collect a lot of information. We're a technology company first, right? So we collect the basic information that we need for payment processing. We don't know information such as what percentage of our hosts are posting or listing on different platforms, what percentage of our hosts use the income that is earned on their platform as their primary source of income. We're also a global company. We pretty much operate in every country that has internet access and has a stable government. And as you can imagine, a lot of what my day-to-day includes is speaking to different governments about what we do and what we can, help in terms of increasing our hosts' tax compliance. That conversation is very different in Russia than it is in Estonia or Denmark. And currently, on the host income tax side, this was previously discussed, so we report in the U.S. based on the current threshold of 200 transactions and $20,000 of income earned on the platform. And as you can imagine, that's not a large percentage of our hosts. We have publicly supported last year, Senator Thune came out with a Gig Economy Act bill that would lower that threshold, and we're in support of it. We understand that the bill was contemplated at a different time when the gig economy wasn't nearly as big as it is today. And so also in the US, that's the only country in the world where we're currently withholding. And actually from an operational and product perspective, it's very difficult to withhold. Also as a payment processor and kind of, the holder of money for a period of time, there's just a lot of legal liability and consumer protection issues that we're cognizant of. We also report in Ireland based on our entity there. But as you can imagine, more and more countries across the world, especially in Europe, are really interested in this discussion. And what I tell them is we want to make this easier for them, and we want our hosts to be compliant. But given the fact that we are a global company, we need simplicity. We need reasonable rules that capture the entire industry. As you can imagine, Airbnb is the face of home sharing, but we're not the only home sharing company. And we sometimes, find that, rules are just kind of capture our business models and our competitors. We also, given that we, how do I put this delicately? Being in a disruptive technology company, right? Regulations, the regulatory issues are huge. And data is the name of the game. And we understand that, but we also don't necessarily want to be an enforcement vehicle against our hosts on the regulatory side. So on the tax compliance side, we completely understand that this is a must. But if that information is used to to understand what our hosts are doing on the regulatory side, whether they have a business license, whether or not they're zoned properly, that's something we take into consideration. And a lot of what I spend my time on is actually not on the income side, it's on the indirect side. Airbnb, our business model, I guess, is similar to that of hotels, and many of our hosts have the obligations of remitting hotel occupancy taxes or similar type taxes, and many times they don't necessarily understand or have the bandwidth to comply with these complicated laws. So we think we're uniquely positioned to kind of step into their shoes and basically be the collection agent and remit it directly to the tax jurisdiction. So we're doing that in over 350 jurisdictions in the US and over 23,000 in Europe. So I'll pause there.
We'll talk a lot more about this, but let me just pursue two things. You said that very few of your hosts reach the 200 transaction, 20,000. What percentage would you say it is?
I'd say under 5% currently.
Under 5%.
Yeah.
The other thing I wanted to ask about is there's kind of intermediate steps between doing nothing and paying withholding. Do you provide just general information to your hosts about what their tax obligations may be?
Great question, yes. So every year, we use, I believe, yes, it's Ernst & Young to publish kind of robust tax guidance for our hosts in the U.S. on their income tax obligations, what deductions and expenses they can report on. We also partner with H&R Block. And basically, hosts get email notifications, and we have a robust mobilization team that basically, incentivizes them through a discount to seek tax advice. We also have, designated pages. It's called Responsible Hosting Page that outlines their tax obligations as it relates to income taxes and other type taxes. What we've also found is, when a tax administration has a pretty simplified a web page, we link to that web page, and we find that compliance rates are higher when there is that that parallel information that's streamlined.
Do you do chats on, on taxes?
No, don't do chats, but we have a designated customer service line that specializes in tax and legal help.
Great, thanks. Okay, Nina, so let's talk a little about the IRS and what it is doing and maybe a little bit about what it could be doing. We'll explore that a little more as the discussion goes on.
So I have to start my comments by saying I don't speak for the IRS. I don't speak for Treasury. I speak only for myself, who also happens to be the National Taxpayer Advocate. So I speak for her. We've looked at this issue for quite some time, but I have to mention that back in 2002 or so, I recommended that the Congress authorize the IRS to enter into voluntary withholding agreements for self-employed persons. And this came about because we were approached by trade associations such as the hair salons and also by the travel agencies who had independent contractors. The hair salons had people renting booths, but they were having a high turnover because of people, they felt, because people were getting into tax trouble and they'd move on from one place to another. They already had an employee like their receptionist on payroll, and they felt just being able to do some withholding on the independent contractors would really be a good for their business, bring stability. And that sort of temporarily went somewhere in an abortive provision, but we had done the data finding that just to cover Social Security, the self-employment tax on all Schedule Cs that we pulled for the year, I think it might have been 2000 or something, 1999 or 2000. If you had cost of goods and you withheld 3% against their gross receipts, you would cover their self-employment tax. And if there were no cost of goods, if you withheld 5% of the gross receipts, you would cover their self-employment tax. And I continue to harp on that issue because I think that helps us regardless of what platform. The issue with compliance, again, I want to say I sort of view this from a very practical matter, which is that although the digital economy or the platforms are 21st century, this is a problem that has bedeviled tax administrators around the world since there were taxes, is dealing with the self-employed and some variety of the cash economy, whether it's a digital cash economy or other. And so the problem solving is really sort of the same, and it's a stepped problem solving. One is, education, and so listening to you talk about, what you're making available. I have recommended that the IRS actually, participate in Reddit chats and conversations on these things to answer questions that people would have. We are actually working in the Taxpayer Advocate Service on a wizard for people because I think some of what the data has shown is the life cycle of work. And so when you're focusing on the young workers versus the more experienced, or I would say people of a certain age, says someone who just applied for Medicare this week,
Wow.
that you move through different stages of your business, and if you can see yourself, if you can, you may not be making much right now, but you may get the self-employment bug and decide that that's where you want to continue to move. And a wizard and education based on life cycle really would make sense there and address the particular concerns that people have. I think that, information reporting is obviously key, but I support, we definitely think not only that the 20,000 should be lowered to 1,000, but what I liked about the Thune bill was it also raised the $600 to $1,000 as a threshold because that hadn't been changed, for cost of inflation, for the effects of inflation and things like that. But I would point out this, that just getting the information is not going to be helpful completely because for rental income, if you have rented out your home less than 15 days, there are no tax consequences. You don't report the income and you don't report the deductions. So we get a number. If we don't know the 14 days, we're going to do false positives right there. So it's much more subtle than just simply getting the dollar amount. And I think we need to think about that as we do, as we go forward in information reporting. The last thing I would say, or maybe not the last thing, but I was reading last night for a completely different reason, the Coinbase summons appellate case, where the IRS issued a John Doe summons to Coinbase, which is a Bitcoin processor or digital currency processor, to get every single participant that's in Coinbase all the information possible. And the district court and the appellate court, over a period of rulings, narrowed that, but allowed that summons to go forward. And if I were some of the platforms, I'd be very nervous because the IRS's summons authority to get data is very powerful, and they could do a summons just saying anybody that makes over $600 and under $20,000, this is a John Doe summons, give us everything you know about them. And so I think that thinking that IRS can't get that information is sort of lulling yourself into a false security. Now, they haven't paid attention to that, but they have the legal enforcement authority right now, today, to do that. Sorry, I didn't want to.
You're absolutely right.
Yep. So I guess, again, I just close with, this is a new variation on an old theme. And one of the things I've been thinking about is, as we go through this discussion, we look at the categories of workers, we've always thought of this as a binary choice, wage earner and independent contractor. And I do think that maybe what we're seeing in this economy is, in the 21st century, is that maybe there's a third category of worker. And so, what you're putting on the platforms, or whether they're whatever kind of platform they are, you're looking maybe at, well, okay, you don't have the obligation to cover these people for your retirement benefits or your health care, but you have to provide vehicles for them to get that. And you have to also provide the vehicle for withholding so they don't get into trouble. So there's opt-out retirement savings. There's with voluntary withholding, or maybe opt-out withholding on this third category of worker. And I'll just throw that out as a thought.
Okay. So Nina, you have, Pooja mentioned other countries and some of the issues there. I know you've looked at what other countries are doing, and you suggested to me that some of them may be a little ahead of the United States in terms of dealing with this. Give us some examples.
Yeah, so there are two one thing is, some researchers at the University of Exeter did a really interesting study a while ago where they looked at some of the online, the Reddit streams and the online chats and they were focusing on, actually, interestingly, graphic design. There were a whole bunch of graphic designers that were independent contractors but were getting jobs from various platforms. And people would be posting like, well, I just got paid. What do I do? What do I do with taxes? And the community would weigh in. And they really did an interesting study to watch, what the community was saying, and did they ultimately get to the right answer for this person, this taxpayer, and they didn't. There was a whole range of, they'll never find you, so you don't have to report anything, to, you have to do everything absolutely right, and here's what you have to do. And of course, they don't know what this person who posed the question did. But that's led me, that led UK to start thinking about, we need to participate in these chat rooms, or at least sponsor chat rooms ourselves. You can come in anonymously and ask us questions and find out. In Chile, what they have done, and this goes back to my life cycle thing, they have created amazing online accounts. And I will just say that the online account that I saw was shown to me, the Chilean tax agent, he was a senior official in this Chilean tax agency, and he opened up his wife's online account, which was a dog breeding business. And I thought, have you told your wife you're showing us her financials? Okay, never mind. But anyway, the online account, it was geared to what business you were doing, and then whenever guidance, not only could you could do your filing, you could see your past history, you could see all sorts of stuff, but whenever the agency issued something that they thought might be some guidance that might be remotely helpful to you or relevant to your work, they would send you a little notice saying, we've just posted this, here's the link, you can look at this. And so the online account, to David's point about going in regularly rather than episodic, it was someplace that you checked because it had information that you could use that was relevant to you or was salient. That I thought was really the way to have a positive influence rather than relying on traditional tools like audits and things like that, which are so far after the fact and in a gotcha environment.
Can I follow up on that?
Yeah, just a second. I just want to ask one thing. Did they translate the guidance into language that ordinary taxpayers would understand?
Well, sometimes, and I will say that like the initial email that might say, this is why this is important, and here's a summary of it, yes, and then you had the link to the actual, legal, lawyered, official guidance. And that is an art, but it can be done. I will just point out that, for Airbnb posts, there's a 24-page IRS publication, and for Uber and Lyft drivers, the publication is 50 pages on, and that's just impossible. And that's something we've said to the IRS, make a publication or a one-page or that just is very high level for people to just get them thinking.
Yeah, Dave?
Yeah, just a couple of comments. I think as a general matter, institutional publications, whether they be from Airbnb or
Be
from the
careful, I
IRS.
do publications.
Yeah, and you write amazing stuff. I'm not kidding. I just don't think the average reader will read your average publication, Nina. As a general matter to think about, the question is whether it's push or pull, and whether the tax agency is likely to be most effective at convincing workers in the gig economy or homeowners in the gig economy or others in the gig economy to pay attention to complex tax provisions. And whether there might be, and again, obviously it's from a business perspective, but when I think about, we have ongoing engagement with folks with regard to their accounting practices and an opportunity to partner with the IRS and frankly with state departments of revenue, depending on their tax practices, to prompt people at the moment when they are in the midst of their business transactions or whatever in ways that they may understand. And I actually believe there's a huge opportunity here to avoid the 25-pager, even though, and Nina, I kid you not, anything that you write will be great. I just don't know that people will consume it. And so it's figuring out at that moment how we really get their heads around it.
And I think Pooja's point about where there is a simplified tax agency page, linking to that it's very important. I don't think the IRS should step out of this dialogue. It needs to translate how it is interacting in this dialogue and provide things that then can be used by third parties to share. Because I agree, but I also have to say, you're talking about other countries. There are other countries in the world, shocking as it might sound, that their tax agency is actually the most highly respected government agency that they have. And it's viewed as something to help people. And it's viewed as supporting small business rather than placing burden on it. Now, that's different from the United States, but hope springs eternal that we might be able to be helpful and be viewed as a reliable and, by the way, accurate source of information that's readable.
I have one point really quick. I think that there are some platforms that are doing innovative work exactly in this space, and Lyft is one of those platforms. They have taken the initiative to go ahead and give all of their drivers, regardless of the fact that they're not legally required to give a 1099K until their drivers hit the 20,200 threshold. They give their drivers a 1099K at the $600 threshold. They also are really good about pushing out notices to remind drivers to file quarterly estimated payments. They really go and do what they can to help prompt and actively try to be a source, not unlike Airbnb with the EY report. I cited it in my work because it really is a good report. And rental income is tricky. It's different than typical Schedule C income, and there's self-employment taxes that aren't necessarily, those issues aren't necessarily involved with rental income. And the platforms are doing some of that work. But I think it also begs the question of, if there's one or two platforms that are doing a lot of this work, why can't we create an industry standard? And if we can see that Lyft can give everyone a 1099 at the $600 threshold, regardless of whether or not it's on or off platform work. And now some states like Massachusetts and Vermont are already requiring the platforms to issue 1099Ks at the $600 threshold. It just needs to become more of an industry norm, and the federal rules should be updated for that.
Pooja, what would it take? What do you need from the government in order for you to lower the threshold and file 1099s for more people?
Well, we would need a law in place. I think what we really look for is equity across the industry. We are reporting in Vermont and in Massachusetts. I think, we're the first in a lot on the indirect side, but it does come at a cost to the company. Like I said, we're a technology company first. To kind of give you an idea of our internal tax house, we have a mighty team of about 20 people, and 2 people that are sitting in this room on the tax policy team. And we have 3,000 employees globally, right? So there's only so much we can do proactively, I think.
Well, be more specific. You say more equity, you mentioned the Thune bill, but more specifically, what would be in the legislation
Okay.
for you to say, okay, this is now doable?
That's a good question. I mean, we haven't really done a robust study of the numbers, and our business model and the hosts that are coming onto the platform are more professional. That's what we're seeing, and we're seeing more of the casual hosts who rent a couple of times a year drop off. On average, we have in the U.S. An average host rents 42 times a year and makes just over $7,000 a year. So I think we would definitely lower the threshold to kind of see where our average host in the U.S. kind of falls. I think honestly, what I had said before, withholding is tricky for us. If we can remit payments instead of withhold. Report payments instead of withhold, I think that would be something that we would definitely support.
But with all due respect, I think you're missing half the equation here. I think one part of the equation is what can the platforms do to enable folks to comply with what they know. But our data suggests using our products that our folks in the self-employed area are discovering thousands of dollars worth of deductions they didn't know about. Mm-hmm. And so while it's great to provide the non-employer information that you're providing, I think it's also important how you enable folks to identify expenses and deductions that they may actually take. And I think there's a huge gap there depending on the sophistication of the people that we're talking about and the amount of education they've had.
So how do you close that gap?
Well, I think Nina's got part of it. The way I'd put it is it's an and, not an or. Certainly tax administrators and agencies need to provide communications that are understandable. I see nothing wrong with linking to one-pagers and so on, but I think you need to go where people live and work. And where they're, when is the mind, what is that point where you can capture their understanding? It's generally around the time the transaction's occurring. Mm-hmm. When you're sitting in your car filling the tank with gas, may be a better time to capture that expense than at the end of the year when you sit down to do your taxes and realize, whoa, I didn't capture all of that, and find out at that point. So I think I would, obviously I'm going to argue for partnering with industry so that you have both, not an or an and. You have education that comes from tax administrators, that comes from the platforms to the extent people sit on a platform, and you look at the products and ways people actually do their work. and see if there are ways you can leverage those products and services to enable people to comply as well.
And that's what people are doing. I talked to a gig worker just this morning who said, yeah, I have QuickBooks and I do real-time expensing through that product, right? Like the private sector can, help with the prompting of that expensing because, as you know from my 2016 research, people are getting shortchanged because they are absolutely not aware of how they can properly claim and report their expenses, and that's even more important today with 199 Cap A. If they are going to get the full benefit of that deduction, they really have to properly report and can't just throw up their hands and decide they're not going to file altogether, which is oftentimes what happens when people fall behind on their quarterly estimated payments and then they go in April to pay and then they realize they haven't reported for the entire year or even the prior year and then they just give up and walk away.
So, how I see it and how I see the role of the tax agency is like somebody starts driving or starts selling something on Etsy or eBay or wherever. And they need to get a federal ID number, an employer identity. That's where they come into the federal government. And so they should be entering into a page that is dedicated just for them, that is a wizard that walks them through and they get to say, well, this is what I'm doing. I'm driving or I'm Airbnb or whatever. And that takes you down a tree that friendly and not deep into the details, but you should know the following things. Once you've got your EIN, now you're into Airbnb. Well, here are some very simple rules about the 14 days under, equal or over. Here, maybe linking to that 24-page publication, but if you have a one-pager, that's great too. But then the other things that you need to think about, like your estimated taxes, you can sign up for emails or text reminders about your estimated taxes. Do that here, et cetera. Would you like to create an online account? Do you want to create a way of making those deposits, having those deposits come out quarterly or even monthly from your account so that you don't have to worry about it? That is what a tax agency can and should do. That is, and then all the other products that are out there, the software products that feed into, your tax return and things like that, that's great. But those core things we should do, and platforms should link to that. As a starting place, you need to get your EIN, go there, and that gets you off on the right foot. And then you can even say, create this online account if you want more updates on your particular area, that you are a craft seller, or whatever. And it doesn't have to be super detailed, but detailed enough, into buckets that people can see themselves. And that is, we are not there. We are not even remotely close to that.
Well,
although there are other countries that are doing that.
And just one
Totally.
thing, sorry, that's a really good point, Nina. We can collect all the information hypothetically that a tax agency wants. What's tricky is verifying that information, right? So to actually have information on our website where the host knows exactly where to get their EIN if they have it, or their social security number is huge, because a lot of times we find that when they don't know it, they just make it up, and we have no way of verifying it. So.
Right. And the other thing for that site is then you can say, people, we're having a webinar, like sign in, we're having and have IRS experts so people could ask them questions. And that is as helpful to the IRS to hear from people directly about what they're facing. That leads to better guidance and information, in the long term, and helps everybody.
I wanted to ask Carolyn about the self-employment tax, and you talked a lot about what you found. Can you talk a little about why people don't pay the self-employment tax? Is it because they don't know or because they're cheating?
Yes.
That's a good question. I think on average, people underreport their income. And I think that's what Treasury TICTA data shows when you look specifically at their audit reports on self-employment tax. People, if you do the averages on what little work has been done by TICTA on this, people underreport their self-employment income by $1,500, give or take. And I think that it's not helpful when you have an entire population of people that's not getting any 1099 and they know that the IRS isn't either. And that's the world that we're operating in now. And what you're seeing with the digitizing of the cash economy is you're seeing people recognize that they don't have to file a 1099 MISC if they go ahead and do electronic payment, and they can somehow fall under the 1099K rules. People are now exercising. There's some great law professors who have coined this term tax opportunism with respect to the on-demand platform economy, and I think that that's what you're seeing happening. And, again, to Nina's point, this is not new. I work with a guy named Jim White, and he was head of tax research for GAO for a gazillion years, and he and I have been looking at these issues together for a long time. And when I sent him my latest paper, he immediately wrote me back and said, "Your numbers are too low. They're way too conservative," because he literally wrote the report for GAO that 61% of sole proprietors underreport their income back in response to the tax gap report that was issued in 2007. And I said, "Jim, I want to be really conservative, and this is what we can, substantiate with the data out there. But, we used an average underreporting rate of 44%, which he would even tell you that that's too low. I mean, this is just how people operate today, but it doesn't have to be that way. At the very least, we could at least give these people a 1099 and let them know that the IRS is getting this information too, and prompt them to report."
Several years ago, again, part of this 2002 thing, because we did a piece on how to address the cash economy, one of the things we suggested was on the sole proprietorship schedule, on the Schedule C, rather than just asking gross receipts, you break it down to two lines. What are your gross receipts per your 1099s? And what are your other gross receipts? And, that's a small nudge, but whether it's then the software companies pick that up as two questions. You enter your 1099s, and now what's your other gross receipts? So you're converting somebody's act of omission into an act of commission. To answer that question and your other gross receipts, you're going to have to lie, as opposed to just, gross receipts. Here's what I got 1099'd on. You're making it more visible. And that is where again, the agency, really thinking about human behavior and how to, to use that word, nudge human beings into being more compliant in a very enforcement way. And then, the private sector and others picking up on that. That is not a trivial thing.
Pooja, I want to come back to you and ask what may be a sensitive question, but I'll try it anyway. So, how much of your unwillingness to provide the 1099s is kind of an administrative issue, a cost issue, and how much of it is because you don't want to be considered an employer?
That's a good question. I don't know. I honestly can't really speak to that. I think, honestly, looking at the facts, I think Adam brought this up. There's a recent California Supreme Court case decision that spoke to this. We don't really have any relationship with our hosts. It's very different from the ride-sharing platforms that you see. So I would say that it's the former. It's the administrative aspects, and it's honestly not even the cost. It's really just we want a level playing field. So to Carolyn's point, if there is an industry standard, we're totally on board. But it's the unwillingness. I wouldn't use the term unwillingness. It's just that we see this day in and day out. The legislation hasn't caught up, right? So once it does, we're on board. But
so the 1099K argument, administrative burden, doesn't really hold water in this context when it comes to platforms. It very well might be a real issue for smaller businesses, but when you have some platforms that do give 1099s and you have some platforms that don't at the $600 threshold, and you have some platforms that are actually doing collection of hotel, state and local occupancy taxes, I don't think it's an administrative burden issue that's going to cause Congress too much heartburn, right? Where I think it gets more complicated is when you try to more broadly require 1099 reporting to capture the digitizing of the cash economy. I testified a couple weeks ago before the Senate Small Business Committee, and one senator who was asking questions about this very strongly pointed out that she had been on the receiving end of small business ire after increased information reporting was included as part of the Affordable Care Act, and how they had to repeal it, and how it was just a failure across the board. And that was the first hint that I had that members are very reluctant to wage back into the 1099 information reporting waters.
Could somebody, we talked about the Thune Bill, somebody want to describe what the Thune Bill actually does, what the GIG Act does? Would you want to
Sure, yeah,
briefly
I have
summarize it?
So basically, it would lower the reporting threshold, the $200, the 200 transactions per year, and the $20,000 transaction, $20,000 per year. With, I think, eliminating both transactions. I think also it increases the $600 standard deduction to $1,000.
The miscellaneous filing. And then it also includes that safe harbor for certain platforms that are overtly concerned with misclassification issues. And it's not just the alignment of the 1099K with the 1099 miscellaneous. It goes even further, and I think it allows some platforms to include, I believe, some voluntary withholding agreements if they choose to, but it also creates this safe harbor. And that safe harbor provision is effectively a poison pill politically, in contrast to the Shabbat bill, which was introduced on the House side, which just focuses primarily on the alignment of the 1099K and the 1099 miscellaneous thresholds.
Explain why the safe harbor is a poison pill.
Because outstanding questions on misclassifications. I mean, misclassification questions have long divided political parties, and trying to resolve those questions with a legislative solution is rarely successful. I mean, that's why the Revenue Act of 1978 has not been touched, right? Like, misclassification issues tend to really divide Dems and Rs, and the Shabbat bill on the House side is one that I worked on and testified on with the majority staff in putting that together. And I strongly advise them to stay away from the safe harbor issues, just focus on the alignment, because this should just be a compliance issue. And because they did that, it's a bipartisan bill. The leadership of the House Small Business Committee introduced that bill. Although the Thune bill, I believe, has some Dems, it's going to be really hard to push that through the Senate overall.
So let's get to the bottom line here. So if something like the Shabbat bill passed, do you think that would sufficiently address the concerns of the platforms that we could make some progress here?
I think that there's not a particularly harsh administrative burden from requiring platforms. I'm not saying all businesses, but platforms specifically, for giving 1099Ks at a $1,000 threshold. At the same time, the 1099 miscellaneous level $600 threshold has been in the tax code since it was instituted in 1954. If you adjust that for inflation, as Nina suggested, that would be over $5,000. And I think having alignment so you limit tax opportunism is where we really need to be to start to make progress on this issue for tax compliance purposes. Now, it doesn't get to really the looming issues of how the gig economy is going to change or the digitizing of the cash economy, but is certainly a step in the right direction. And we know, based on the score that JCT did of the Thune bill during the November tax reform debate, that it raises at least $3.6 billion. My numbers are almost double that. So I think that there's more work that needs to be done by JCT in considering the entire landscape of this population to up those numbers. So it is a big revenue raiser.
Just coming back to, I think that the importance of voluntary withholding agreements can't be overemphasized.
Right.
It puts it back into the marketplace, like you're willing to offer this to your employees, so that may make you more desirable because you're helping them stay out of trouble. Others may want the cash and run. But the point is that having that authorized in the bill makes it possible and gets us closer to that third category of worker and sidesteps the worker classification binary choice. Now, there are all sorts of public policy reasons for not doing that, retirement, income security, et cetera. But I'm a tax administrator and I need to get the revenue in. I mean, I personally don't, but the IRS as a tax administrator does. Yeah. On the other hand, I want them to do it right and I want them to do it well. And that goes back to why we recommended the 3% and the 5%, because our data showed how many people were sole proprietors who were marginal. So many of the sole proprietors, and your data from the first panel is showing this over and over again, that many of them are not even required to file tax returns but for the self-employment tax. So you don't want some large percentage, and focusing on the self-employment tax addresses some of your concerns that people aren't paying that into the system. With a 3% or 5% percentage, depending on cost of goods, you would be able to get that into the system.
And just a quick comment on the whole voluntary withholding agreements. From an industry perspective, what we've seen in other countries for businesses actually partake in it is some kind of incentive for either the corporation or their hosts in terms of tax-free thresholds, greater withholding thresholds, and so forth. Denmark is one of the first movers and shakers in this arena.
Well, and you see that on the VAT side, when countries have value added, there's a threshold, like gross receipts, like UK, I think it's £15,000. We don't care about you. Now there's bunching around that. But the point is, it's a recognition you're too small to have to deal with this, and that goes to some of the burden that people are feeling.
Mm-hmm. Nita, do you think that the move to the platform economy, whatever it is, as well as 199A, are going to discourage more people from the cash economy? Are we going to get people making the shift at least to the, or the incentive still not enough?
I don't think so. I think there will be always the true cash economy. I mean, I travel the country. I go to so many places that most people have never been in this United States talking to taxpayers. And, they're not on digital platforms. Some may be in the community, but others are just doing transactions as they've always done transactions. And so I think what, the platforms have done in the digitizing of commerce in a way has added another wrinkle, but sort of in the same way that coins did back in the, 1st century BC? I mean, it just had the same effect, and we're just seeing it. And I don't mean, I'm not being a Luddite, I'm just saying that human beings are, life in all its fullness is how they undertake their commerce.
Okay, I agree with that.
But
however, there's been really great research done on the ubiquity of smartphones. This is how lower income communities primarily access the internet.
So there's an opportunity, but I don't think it's going to get away from the cash economy operating.
That's true, but I mean, I will say that when you look at some of the great work that Pew Research has done on smartphones, and I think their report that they did in 2015 or 2016 said that 88% of Americans use smartphones, and that for something like 60% or more of lower income households, that's their primary access to the internet. Mm-hmm. Smartphones are what is going to be driving this in a way that's different.
Right, but you also have to look at how they use it. And our research has shown that the low income and the elderly, for example, do email once a week. They use their smartphones for texting and things like that, but they're not using it for more sophisticated stuff. They're actually, a lot of them are using it for Skype and
Right.
and face-to-face and things. And those are all opportunities, and they're even opportunities for the tax administration. Imagine, calling up the tax administration with a question and being able to see the person who's assisting you, and more importantly, the person who's assisting you be able to see you and be able to see that you're confused, you don't understand what they're saying to you, and that prompts a better conversation. Those are real opportunities.
Dave, what do you think about this cash economy thing? Are we going to see some sort of qualitative shift away, or is this just always going to be with it?
So I'm actually intrigued by Carolyn's argument that folks are beginning to use digital currency, use Venmo, Zelle, whatever it might be, to make payments. I don't actually believe the cash economy is going away anytime soon, because I think, this is me speaking, not my company, but I think that people, where there's a will, there's a way to find opportunities. And we see that, the author of the last tax gap study may be in the room. I don't know if it's the last one, but close to it. And it has always been thus. The lack of verifiable data with the tax administration agency leaves people with opportunity. What we've just talked about are ways of closing that opportunity on one side, which is require the platforms to report something. But we still haven't got on the other side, which I'm still interested in, which is what is the expense deduction? What are the other opportunities people have? I would suggest that we continue to struggle with this. I believe that Nina's point about nudges and prompting provide opportunity, but there isn't a silver bullet. It is a set of things that goes through, and at the end of the day, we will still have a long tail of residual opportunities that will occupy rooms like this for years to come.
Yep.
So with people like this.
I think that's right. But I think that there's not a silver bullet, but one of the things that Nina has talked about, and it's something that I picked up when we were together and I testified in July, is look, if you could do such simple things as changing the deadline for quarterly estimated payments for the second and third quarters so that those deadlines fall after the quarters, that might really help increase tax compliance, right? Lowering the 1099K threshold, or as Nina has suggested, if you created some sort of informational toolkit that platforms could provide their workers as part of the onboarding process, right? Like those are.
I actually have to say, I think that's great, but that is not going to solve tax compliance by giving workers a handout when they join the platform. I think that's actually a great thing to do, but I think it's naive to believe that that is ever going to result in much tax compliance.
Yeah, see, where I think it is that they have to come in to get an EIN. So, I mean, they don't all have to, but some of them do. So when they come in and have an EIN, that's when we get them down that road.
Absolutely.
That is just, here are the issues. Do you want emails, things like that. If they don't come in, well, then,
I'm not saying we shouldn't
right,
do that.
No, I know. I agree with you that it's just, as with all compliance work in any area, there's the whole continuum of activity that you need to do and different kinds of touches. And thinking that, information reporting is going to be the end-all, be-all. It's important, but then what does the agency do with that information and how does it use it? And to Pooja's point, the court decisions say that if the IRS just went in and said, you owe this tax because of this 1099, the IRS bears the burden of the proof because that information may be wrong. It's not based on the taxpayer's books and records. It's some third party sending this thing out. Yeah. And so we have to be very careful thinking that that's going to be the answer to everything. It's part of the solution.
Sure. Just two comments. One is, I think you probably got folks' attention when you said that the IRS could, with a John Doe summons,
I just thought I'd
obtain all of the data. And I think that's true. There are many things the IRS could do with resources, capabilities, and time. None of which are in excess supply with the IRS at the moment. So I think the reality is, what is the most effective way to enable compliance for those who wish to, reserving the IRS's more draconian tools for those who don't. So that's part. The other thing I'd say is, having moved to the private sector after 30 years in government in various aspects, I've had the privilege of watching how at least my company does cognitive research. And it's evolved over years, and it's become incredibly sophisticated. And I was privileged to watch a customer proceed through completing his tax return at home with his wife, who was out in the background and then shouting at him from the kitchen. And but he talked through the way he was thinking about the things, and there is nothing more powerful than realizing that people don't see these things the way you see them. And the you in that sentence is people like us, maybe not all of you, but who come with biases, education, years of understanding. That is not the customer experience necessarily. And it is only when you step back and watch where their eyes go and how they talk and what the wife says to the husband and then takes over part of it because he doesn't get it, that you realize things that we think are simple are really complicated for folks because they don't engage in them and they don't know what these words mean, let alone what to do with them. And so that, I think, is a next part of engaging, and it's something I think tax administration will hopefully get to. I'd love to bring it back, but I think that's why this is not a single solution. It's a variety of things to recognize where these folks in the gig economy really are.
I think that to follow up on your point, though, I had a conversation with Dave Cowder. He's been really good about coming back to AU, and we had a conversation in May about the future of tax work, and I specifically asked him about this 1099 question and what his expectations were for the IRS or Treasury. And he really emphasized to me that he had really hoped that there would be private sector solutions. And I think that was something that I was not anticipating, but that, I think that it was something that should be noted, that's a little bit of insight as to what they're thinking.
Well, that's where, with all due respect, that's one branch. I think that there are others thinking otherwise. And when you have the self-employment, the unincorporated business component of the tax gap having, I think the last time I saw it, it was a 43% correct, is it a correct reporting percentage? Something like that. That's a stunning number, and the IRS's failure to play in that sandbox repeatedly is unexcusable. And so to say that the private sector is going to do something about that and solve that is ridiculous. It is the tax agency, it is the tax administrator, and it has a role to play. And that role doesn't have to be all audits. My deepest dream is that people would respect the IRS and look to it as a source of information that's understandable. And that would be the launching off point to, consulting with your tax experts, your preparer, whatever. But to just walk away from the self-employed sector and the version of the digital, the newest flavor, which is the gig economy or whatever we want to call it, is just not acceptable for a tax agency in the 21st century.
I just want to throw one. Go ahead.
Just one thing. I actually agree with Nina, amazingly, on this point, which is that look, the notion that the private sector is somehow going to be the compliance and enforcement mechanism for the IRS
Right.
is a bit naive.
Right.
I think there are places where that can occur because it's sort of the Venn diagram of the intersection of interest, because our interest is enabling our customers to meet their obligations. And so we can, in that space, be a partner in helping. But we are not an enforcement arm, and our customers wouldn't be our customers if they thought the first thing we were going to do is to tell the IRS what they're doing wrong.
Right.
So it's a component, again, of an overall approach to thinking about this, and the agency has clearly a role to play. So does industry, but there is an intersection in the middle where we really can partner together because it is in the interest of the taxpayers and the tax administration system.
I just want to throw out one other thought.
And world peace. Did I mention
world
that?
peace.
World peace.
I just want to go back to what Carolyn said at the very beginning of this conversation about home care workers. And there's also kind of I think, an important issue on the customer side, the demand side of this. If I can hire a home care worker for $10 an hour off the books instead of having to pay $20 an hour, if I hire somebody through an agency, which am I going to do? So I think there's a whole set of other issues that we have to think about as we think about compliance.
Right, but what if that home care worker is like my babysitters and asks to be paid by PayPal? Right? Like, I pay all of my babysitters. I got a 4-year-old and a 5-year-old. My husband and I both work full time. Our home economic questions definitely revolve around care. right, for our children. And in the last 2 years, our steady supply of babysitters has all been asked that we pay via Venmo or PayPal. None of them want cash.
Well, but there are plenty who do, because they don't want to pay tax.
But Carolyn, if that happened and they suddenly discovered that if I use Venmo or PayPal, the IRS is going to get it and find out about it,
They might
don't you
switch
think
back.
that might change their behavior?
They might switch back, but when you talk to them, just how they use, at least the ones that I've talked to, right? The college students that I interact with every day and then I talk to on campus, this generation, they use Venmo and they think it's cash.
Yeah, I
Right.
use Venmo to pay my rent. I used to. I'm not that
Right?
young.
I mean, it is a different way, and it really is going to challenge our understanding and how we get data, because the J.P. Morgan Chase Institute data is the best data out there about the on-demand economy, and it's all connected to a bank account. But your PayPal or your Venmo doesn't necessarily have to be connected to a bank account. It can be connected to a credit card or a debit card. That's not necessarily connected to your
Well,
bank
the
account.
IRS has the authority to summons credit card accounts, and it has. I'll just remind, and to David's point, are we going to, is it going to do that? No, but it could decide to do an initiative, as it's done with the offshore credit cards back in 2001 and 2002, which was very effective. And so, it's possible. And, the point is, why, to me, for the tax agency, I'll come back to that word, there's a continuum of its activity. And so if we put the tax agency in a position where all it's going to do is the enforcement side of it, you have a tax agency that's going to breed even more non-compliance than we've got now in that sector. So you have to have the tax agency thinking about, as part of this overarching strategy, which includes treating the private sector as our true partners in this, in the appropriate places, how do you touch that taxpayer at different points in time to get the maximum compliance and change non-compliant behavior to compliant behavior when you identify it. And that's how you have to frame everything that you do in tax administration. Or all you're going to do is just go to the quick and dirty, we're going to do X, we're going to do this audit, we're going to do this, and you're not going to have the change in compliance behavior that you need to get. Your numbers will always look the same.
We have about 15 minutes. I'd like to get some questions from the audience. Carl in the back.
Thanks, Howard. My name is John Doe. I'm a taxpayer and I'm a small-time contractor, and my income is not the majority of my household income. I've been trying to, and maybe because of my own clumsiness, but I think there's a lack of coordination between Social Security, which I'm glad you brought up, that if you don't pay, report your taxes, you don't get credit for Social Security. So I noticed on the Social Security record of my earnings, there was a missed small check, a 1099 from a few years ago, and last year's earnings were a weird number when it should have been a round number. It missed several $1,000s. So I called up Social Security, and they said, you need to send us the 1099s, and I did, and then I got a letter from the local office. They said I sent the wrong information. You need to send your tax returns. So I interpreted that as, John Doe, go away. So to get the tax returns, I need to get my wife to give me the tax returns. But anyhow, I don't know how do they coordinate on this? I want to, in my particular case, I'd rather pay the taxes and to get the credit for the Social Security.
Right. So
Does that
I
make
would
sense?
say two things about this. One is, if you want to come up to, well, where's Chris? Chris, I saw you. If you want to give your information to him, we'll get a case advocate to help you reach out to Social Security and try to get those records fixed. So that's the first thing. That's what the Taxpayer Advocate Service does. One of the things. But the W-2 information goes from employers directly to Social Security. And then Social Security sort of perfects it, makes sure that names and numbers match and stuff, and sends it over to the IRS for us to put into our records. That's different from the 1099s. The 1099s come from the payors directly to the Internal Revenue Service, and then what Social Security gets from us are your net self-employment earnings from the income tax return. So the 1099s themselves wouldn't show up in your Social Security earnings. It would be your W-2 plus whatever your Schedule C net profit is that you're reporting on your Schedule SE. So, but we can look at to make sure that that's on your record, and if not, we could figure out a way to get that information over to Social Security. But the Social Security and the IRS have an exchange agreement for that SE income.
Okay, other questions? Yes, ma'am. Hold on just a second, Mike.
Hi, a point and then a question. This is very helpful. I'm Mindy Reiser. I've done a lot of work internationally as well as here. Given harangues on civil servants by certain political figures, this must impact the way people see government agencies. I just leave that there. On the more positive side, Nina, if you could say a little bit more about those countries for whom the tax authorities are, if not beloved, at least esteemed. I was quite intrigued with that. Are these largely Nordic countries or not?
Yeah, most of them are Nordic countries. And so you do have to look at that, they have some of the highest tax rates, if not the highest tax rates on individuals in the world. But they have a culture of getting services and goods from the government. Higher education is free. You have 6 months paternity leave, 6 months maternity leave. The health care in those countries. So there's a sense of what you get for your tax dollars that I think there's a disconnect here in this country. We don't understand what our tax dollars go to. We don't really have a very good understanding of our tax rates or our tax system, as David was noting. We just don't have that understanding. We certainly don't have a connection between what taxation does and gives you. In UK, there was a point, and I don't know whether it's still up on their website, but on their online account for individual taxpayers, you could go on and see what you paid in income taxes over the last year and where it went. And it was really sort of cute because it had you paid for 1/8 of a teacher's salary, and so there was a little teacher with 1/8 of it, colored in or something. There was a little gun, and that was for defense or something like that. But it was like you could actually see your own little pie chart of not just the larger pie chart, but how yours did. I have proposed for many years and threatened to do this myself and may do it this year, doing a survey with people where they could color in their own pie chart of where they wanted their tax dollars to go, on the assumption that maybe if you added up all that pie chart, it might end up where we actually are as a country. Like some people would put everything into the arts, other people would put it all into, foreign aid, other people would spread it out to military, defense, whatever. But maybe you would find that blended, you end up where we are. Or maybe you wouldn't, but that would be a very interesting thing. And I've thought that if people got a tax receipt that told them this is where your money is going this year, and you get to color in where it is for next year, and we'll just report it, it's not going to have any binding effect, but it might get more participation and awareness of the system.
I wonder if I could just follow up on that. I chaired the OECD Taxpayer Services Group for 3 years. So that's composed of essentially between 40 and 46, depending on the year, tax administrators from around the world. I saw the Chilean personal account in its naked glory when the Chilean representative put it up on the overhead for all 43 countries to look at. It was his own. They had compiled not only his federal taxes, but his state, his property. It was the full Monty, if you will, with regard to that person's government interactions. I've dealt with the Nordic countries, the Germanic countries, Asian, and what I would tell you is that culturally they are in very different places. I've lived in Scandinavia, and I can tell you there's a different attitude about government and its engagement with its citizens. And so while it is instructive and interesting to learn from those countries about how they're thinking about tax administration, it is often difficult to translate those lessons into our culture and our country. And in today's fragmented society, even more difficult than one might have assumed it used to be.
But that goes back to, I won't cede ground on that.
Of course
that I
not.
do not think that means we should not try to educate United States taxpayers about what our tax system is, et cetera, and to try to get more engagement. It will look very different. And I've thought deeply about this. It will look very different from all the other countries. That's fine. But for us not to even try, that's a problem.
A couple more questions. Yes, sir.
I'm Brian Tumulty from Bondbuyer. My question's for Caroline Bruckner about Massachusetts and Vermont and their lower threshold for 1099s.
Yeah.
So what has been the taxpayer reaction, and what has been the revenue increase for state governments, and are other states considering doing that? And might that influence Congress someday if it goes over well in the states?
It has, I haven't talked to tax authorities in either Vermont or Massachusetts. You might have.
I haven't.
But I have talked to some of the firms that do 1099K preparation. And I did that in preparing some testimony that I gave to the Senate Finance Committee in July. And they told me that it has catapulted reporting by over 100%. And informally, I looked at chat boards and Reddits in January and February, and all of these Uber drivers and Etsy shop owners were complaining I suddenly got a 1099 because I had never had one before. And so there was certainly the first wave of surprise. But that's what I've understood informally. What I think you should know is that California's state tax franchise board just put out a presentation on the on-demand economy and how it's playing out in California. And they noted in that presentation that of the top 100 platforms, less than 12% gave 1099Ks to their workers. And, states are starting to become very cognizant of this issue. And Vermont and Massachusetts are first movers, but New York and California are not far behind. And once you have the states requiring the alignment of the 1099 miscellaneous and K thresholds, the federal government will be soon to follow because that information is already getting reported anyway, is my suspicion.
Well, Pooja, actually, it's an interesting question. If you get New York and California doing this, does the federal government have to do anything, or at that point do you just do it for everybody just because you're doing it for such a large fraction of the population anyhow?
Yeah, I mean, from an administrative standpoint, we don't mind. We would just need the federal government to, again, pass a law that would require us to do so.
I think it's somewhere if you get, like half and half, and then, that becomes a burden that you have to keep track of, okay, this state. So that's where you have pressure or cover for the federal government to do it. Then you're simply making it the norm for every state rather than on the federal level, and then the states can piggyback and get that information.
And it changes the politics because from the platform's
Right.
point of view, they don't have to comply with 50 different state rules. They just want
Exactly.
one. So.
Right.
One or two more questions. Eric.
You.
Thank you. Great panel. You've been talking about various tax administration issues, and I was wondering if there were any policy recommendations that might make the system easier to administer for independent contract workers and put them on a more level playing field with employees. Dave mentioned you should keep track of when you buy gas, and it occurred to me, well, if you're using the standard mileage deduction, you actually don't need to do that because the company will. So could there be a standard deduction for expenses generally or something of that
people
sort?
have thrown that, we have the small business, sort of the home office standard deduction. I thought that was a very important piece to eliminate some of that sort of record keeping and things like that. I think that would be something that you could look at the data and see what percentage cost of goods is for these kind of businesses by industry codes, and maybe come out saying, if you want to play it safe, you could just take this percent. I know that there are countries around the world that in trying to look at, am I going to look at this entity for an audit, whether it's in a VAT or somewhere else, they're using that kind of big data to do it on their compliance side and their case selection side, but nobody's brought that into the policy side, except where you see exclusions for VAT. Like we're not going to mess with you. We don't want to get the smallest of the small sucked into this program.
Let me get some
Yeah,
other answers to that question. Pooja, go ahead.
Sure, just from a platform perspective, right? Given the fact that we're global and we're operating in over 180 countries around the world, simplicity. I think in terms of the voluntary nature, incentives, right? And just also from the individual's perspective, they don't feel bought in. They're not receiving any benefits. So a standard deduction or some kind of tax-free allowance would be wonderful. Also, I think platforms generally do like the voluntary nature of withholding or reporting. And yeah, with 1099 reporting, or just if you think about our business model, right, for a second, we're taxed at every single level. The guest is taxed, our hosts are taxed, the corporation is taxed. We're talking about indirect taxes, sales tax, and in the U.S., our business is very state and local, and we're not investing on the tax professional compliance side as much as we are on the technology side. So to keep things streamlined would be hugely beneficial for also platform compliance.
I've thought about this question because people have asked me, shouldn't there be a small business deduction for gig workers regularly? And my response to that is, we just spent $415 billion on 199 Cap A. Why don't we see how that works first? Right? Like, how are you going to get the political appetite for people to go back to that well when they just fought to get 199A? And I don't know that a standard deduction in lieu of or in addition to 199A, how that would look. And I would suspect that it would be a harder hill to climb.
What is 199A?
199 Cap A is a tax incentive that was included in tax reform, and it's an up to 20% deduction for individuals with business income. As part of tax reform, they reduced the corporate tax rate from 35% down to 21% to create more of a level tax cut for the majority of businesses, which are small businesses and individuals with business income. They included this brand new 20% deduction that people that aren't incorporated, that so long as they're not in services above a certain threshold, can take up to 20% of their income. Now, there's some complications around how you calculate it. There's some complications around how you calculate it once you get above certain income thresholds, and that's about $315,000 for a married couple. And beyond that, if you actually make more than that and you are in services, you're phased out of it altogether. So, but that generally is not going to impact this population because the majority of on-demand workers are not making in excess of the income thresholds for the 199 Cap A deduction.
You know what might be interesting is over the years, right, that over the years you could look at the 199 Cap A data and sort of
see if
say,
it works.
Really, should we do a standard deduction instead? That would be very interesting, looking at the incidence of it and the distribution and things
But
like
from
that.
a budget perspective, it's a lot of money that they just dumped into this, right? Like, how are they going to...
If you've already had the budget.
Well,
They do
they
have the
still
last-
need to clarify all of the rules around it, which is one of the things we're struggling with, which is there are huge, notwithstanding the 184 pages of guidance.
Well, it used
There
to
are
be
just a few
261, so count your blessings.
We've got some more.
Okay, I think we are out of time. Let me thank our panelists, Dave, Carolyn, Pooja, and Nina, for a really good panel. Great discussion. Thank you.
Thanks for watching. Be sure to like and subscribe for more videos from Brookings.